Good evening. This is Brian Shannon from Alpha Trends. It's Wednesday evening, August 30th, 2006. I've got the S&P 500 on the screen right now. And basically, again, we're in an uptrend, so not really much reason to think that we're going to pull back deeply. This level here, 129.40 or so, is the more important level of support right now. Breaking below that would give us reason for concern. But right now, I'm not too concerned about downside, but we have to be aware that there's always the possibility that things could go unexpected. That is, that we could see some unexpected selling come in which case that's what we have our stops for. So I'm not going to spend any more time looking at the market. Let's go ahead and take a look at some stocks for trading tomorrow. Now, this first stock that we're going to look at on the long side is called Avici Systems, symbol AVCI rather, Apple Victor Charlie Indian. And Avici, I'll just let you know right now, I have a position in. I'm long some of the stock, and I'm also long some options. I think I got involved a little bit too early. I've actually been involved in the stock for about a week, and it's I bought it at a time when I shouldn't have. And the reason I bought it, I actually looked at the fundamentals. I think the fundamentals are great. There's a pretty good short position in it. And I was really kicking myself because I let my opinion get in the way, and I've held this thing for about a week. But realistically, now's the time to consider buying it. I'm up a little bit in it, and I'm not trying to just get people to buy it because I'm already in it. I think it looks like a good situation. So let's look at the daily chart. The stock's got some resistance. This level is 850. It's been making these higher lows. We had a big gap here, and again, I'm going to confess, I looked at some fundamentals. So don't email me with criticisms of that. Once in a while, I look at that and let it sway my opinion. And again, it swayed my opinion, and I regretted it. But bottom line here is the chart is starting to look really nice. It broke past this level of resistance, which is about $8.20. That's been given a trouble the last couple days. We've got the 5-day moving average back up through the 10-day moving average. And looking at a 10-minute time frame, you can see that after this rally higher, it pulled back down to the 5-day moving average. Now we got two volume spikes in there today. First, this volume spike early on in the day, followed by low volume consolidation, and then another spike of volume. Realistically, the stock probably needs to get above $8.50 before it really starts getting going. You could play it above that level, or maybe on a slight pullback in towards about $8.30 with a stop just under this level here at about $8.15. And I think the stock can make a run for about $9.50, $10 a share. That's what I'm looking for in this stock, and we'll see what tomorrow brings. But again, I do own the stock. Just for full disclosure, wanted to let you know. Flextronics, symbol FLEX. Flextronics has a nice uptrend here on a daily time frame. It found support at the 10-day moving average. Now it's been closing below this 20-day moving average. But if you look at the 10-minute time frame, we have an easy to see objective of where we should get involved in the stock, and that's above this level here, $11.79. Above $11.79, we want to buy the stock. So that's where we'll buy it. We'll put our stop just below here. This is, we'll put our stop at 11.58. So we're risking about 21 cents in this stock. And if it gets going, what I think it can do is make a rally up towards about $12.50 a share. So not a huge risk and not a huge reward, but the risk-reward is nice when you consider how much potential upside there is versus how much risk there is in the stock as well. OLAB, this is OraLabs Holding. This stock was up, I believe, on some kind of news about a week and a half ago. It had a huge rally here, and it's pulled back down to that rising 10-day moving average. Now, the volume over the last few sessions has been very, very light, and that's a good sign. It says that the sellers aren't giving up on this stock. You know, there's still bids in here, and the sellers aren't coming in, smashing through the bids and pushing the stock lower. So what we want to look for in here, you'll see that that 5-day moving average is at about 607 right now. So we wanted to get at least above that. What I think we really want to see is to see the stock trade above $6.25. Above $6.25, that's where I'd like to see to purchase the stock. And at that point, I think I wouldn't risk more than about 25 cents in the stock, right? Let's say 30 cents. So stop at about $5.95. And I think you'd be looking for a test of the highs near about $8 a share. So again, relative to the amount of risk, we've got a very nice reward setting up in OLAB. Now, the next company we've looked at a couple times, and this is called, again, I'm not going to even try to pronounce it, but the symbol is XING, X-Ray Indian Nancy George. And the stock has been building in here and broke past this level of resistance on this little cup and handle that I'm just drawing in right now. Okay, that resistance looked like it was becoming support, came down, shook some people out. Now it's back up above there, and that which does not kill the rally will only make it stronger with this higher high and higher low in here. Now, the problem with the stock is that it had a real nice run late in the day. I did trade the stock. I'm out of the stock now, but I'm looking for a re-entry. If it pulls back to $10.50 a share, what I'd like to see it do is pull back to $10.50 a share, right about down into here, and then I'll buy it above $11.60. So the pullback actually should be $11.50, not $10.50, I think I just said. But if it pulls back to $10.50 or so, let's just say, you know, give or take 5 cents, and then rallies back up through $11.60. I don't want it to be a case like Form Factor today where you're waiting for another 4 cents pullback that doesn't happen and you miss a 3-point opportunity. Now, I don't think XING has a 3-point opportunity, but once we get involved in the stock above $11.60, I think your stop can go just under $11.40, so let's call it $11.38. We'll risk 22 cents on XING, and I think the stock can make it up towards about that $13 level. So here we'd be looking for about $1.40 in upside with about 25-30 cents of risk. Again, a real nice risk reward. Now, 2 shorts I want to look at here. First one is Celgene, symbol CELG, Charlie Elf, Larry George. I don't know why I said Elf, but here we've got the stock making these lower highs and lower lows in here. It's rallied up on light volume relative to, you know, the volume that was increasing on the way down. Now it's decreasing on the way up. We've got, you know, bigger volume yesterday. Bigger volume without further upside equals distribution. So here's how I want to look at this stock. It's making these lower highs. It can't make a higher high in here so far. Now, that doesn't mean we want to sell it short yet. We want to wait for the stock to get below this level here. We want to sell short Celgene below $42.35. We put our stop up at $42.76, so we're going to risk about 50 cents. And on the downside, I think you're looking at about 41.25 as far as the target goes, which is the low that it saw just a couple days ago in there, right about this level, about 41.25. Lastly, we'll look at Imclone. Imclone we've looked at a couple times recently on the short side. Hadn't had a reason to get involved yet, but let's punch that symbol up here, IMCL. And Imclone broke down on a gap. It's tried to close that gap. Looks like it's not going to be able to do it. Now, today we saw some sellers come back into the stock. Unfortunately, it sold off a little bit too hard and too steady here towards the end of the day. So what I'd like to see would be a rally up to about $30.05. Once it gets up to $30.05, we then want to sell short weakness below $29.90. Our stop would then go at $30.30, which is just above here. So selling short at $29.90 would have a risk of about 40 cents or so. And on the downside, I think you're looking at about 28.5, which would therefore give us about $1.40 in potential opportunity on the downside. Now, tomorrow's trading is going to be somewhat thin, I would expect. And if you look again at the IWM, the Russell 2000, I think we're going to see, and here's my lines from before, I think maybe a little bit of strength in the morning, then a pullback, drift in, settle down, and maybe settle in, you know, above that 70, what is this level, 71 level, and hopefully close above 71 for the week, and then next week things should start picking up again. But again, volume is a relative measurement, as you've seen. We can still make money in regardless of what the overall volume environment is. Having a hard time speaking tonight, I don't know why, but my name again is Brian Shannon. Thanks for visiting my blog, and check back tomorrow. I'll have a video at the end of the day. Thanks.